Inflated house prices in Australian capital cities and suburbs means it's more competitive than ever to own property. Anthony Millet joins me today to explain how SMSF investors can get in on this. Welcome, Anthony.
Thanks very much for having me.
It sounds like a new concept, but what exactly is fractional property investment?
So fractional property investment is basically the ability to invest in property without owning or requiring the funds to buy the entire property yourself. Obviously, property is very expensive, becoming even more expensive, especially in Sydney and Melbourne, and has become quite unaffordable to not only people wanting to own, but also to investors. With BrickX and the concept of fractional property investing, we're able to buy the property into a unit trust, a fixed unit trust, split into 10,000 units, and investors are then able to buy those units and basically partake in the returns of property investing without having to own the entire property.
Great. And knowing it can get quite messy trying to bring real estate into something like an SMSF, what are the advantages of an SMSF trustee buying property this way?
Sure. So one of the big advantages is that investing through BrickX is a financial product. BrickX is a financial product. So a lot of the restrictions that exist around property investing through your SMSF, such as lower lending requirements or the ability to be able to borrow as much, just the high cost of property, etc., and then any kind of other benefits that maybe you don't get by investing in property through your SMSF. With BrickX, it's a financial product. You get the benefit of capital gains discount if you own that over a certain period of time. You also get the benefit of property depreciation still through a deferred tax income. So it really makes it quite simple by removing the hurdles of property investing, and also it's much more accessible with low entry points.
So how can an SMSF diversify its property portfolio specifically?
Sure. So on BrickX, we allow all investors to be able to easily diversify, have control, and have access to the transparent information on the platform. By having a low brick price or a low entry point, let's say we've got a property worth $1 million, split that into 10,000 bricks, and each brick is worth $100, it allows SMSF investors who maybe want to invest a few $1,000s the ability to spread that across individual property investments. And they've got the control over when they want to buy into those property investments, and also the control about when they want to put their bricks up for sale and get out of those investments. Traditionally, property investing is very, very illiquid. But with BrickX, that ability to put your bricks up for sale and allow them to transact on the platform really is a bit of a game changer in terms of property investing.
Great. And so what's the interest from SMSFs been like, and do you know how many SMSFs are using BrickX?
So we've got a whole array of customers from the age of 18 to 82. And we're finding that with SMSFs, we've got a little bit of a sweet spot, a real interest there, because this is an alternative for them to traditional property investing and to other financial products that are out there. What we're generally finding is that their average investment's about $13,000 when they start up, and we've currently got over 50 SMSFs on the platform. And we only launched actually 6 months ago, so we're really happy with that growth.
Great. Are there any early trends you're noticing with SMSFs?
Yeah, what we're seeing with SMSFs is that once they've put money in, they're likely to come back for future property launches and contribute towards buy bricks in new properties. In addition, we're seeing that they're really taking a diversified strategy. So when they first come to the platform, they're generally not just buying into one property, but they're spreading their risk across. That's really pleasing for us, because diversification within property is often a challenge due to the cost of property. But as we've said before, for a few $1,000s, you can build a diversified property portfolio. So seeing that trend is really, really encouraging.
And do you have any expectations for future trends or demands from SMSFs?
So as BrickX evolves as a platform, we're going to evolve in terms of the exposure that we can give SMSF customers, or all of our customers, in terms of, at the moment we're only in Sydney and Melbourne, but by the end of the year we hope to be in all capital cities. We're then going to look at regional areas, and we're also going to consider other investment types such as industrial or commercial property. So you'll really see the BrickX platform start to expand. Because we're a direct-to-consumer business, although we can work with advisors, that direct relationship with the consumer means that we can kind of know what the consumer is thinking about, and we can help evolve our strategy to better serve our customers. So if our customers or the BrickX investors are telling us, hey, we want commercial property, or we want industrial property, or we want options in Canberra or Perth, we can really help evolve that strategy to better suit their needs and their desires.
Excellent. And you mentioned advisors. Are you looking at that channel, and have you had any research or ratings?
So we got some really early engagement with advisors, and being new to the market and going out as a direct-to-consumer business, it was an area that we really wanted to spend our time navigating properly. We've since decided that the advisor market is something that we definitely want to pursue, and we've actually just had completed an SQM research report which has rated the BrickX fund as 4 stars or a superior fund. So we're now ready to really engage on a proper basis with advisors, because I think we're now in a situation where they can hopefully get us on the APLs.
Excellent. And so what kind of fees or costs could an investor expect to pay using BrickX?
So it's a really simple, transparent fee structure. Whenever you buy bricks, there's a 1.75% transaction fee, and whenever you sell bricks, there's a 1.75% transaction fee. There's no funds under management, there's no performance fees. So it's quite different to other fund managers, but you really can see exactly what it is that you'll be paying and what you're in for. In addition, you are investing in trusts that have real property in them, and those trusts do have their own expenses, but those expenses are paid out of the net rental income of the individual properties. And I guess it's worth saying, just to clarify as well, how the income payments work and how you make money from investing in BrickX properties. All of the properties are rented out, and every month the rental income comes in. We pay off the expenses, the mortgage if there is one, the water strata council, and then the net income that remains is then distributed on a monthly basis across the 10,000 bricks. So it's like you own the whole property. It's similar to that, except you only own a fraction of it. And then in addition, every 6 months we revalue the properties via an independent valuer, and that shows how your brick price moves and how your investment is essentially performing.
Great. And so looking at fractional property investment in the future, how do you see that evolving?
I think with the scenario that we're in here in Australia at the moment, with the housing affordability issues that continue to exist and continue to become more of a challenge, I think we'll see innovative ways to try and help solve not just getting people into houses, but how do we get that investment access right? How do we make sure that those superior gains that have traditionally been seen in the residential real estate asset class are actually transferred and available to everyone. So I see evolution of our product. I probably see more people coming into the market because we're in a $7 trillion industry that has very few financial products enabling anyone to get into it. So I do see a lot of innovation and evolution of our industry.
Great. Well, thank you so much for your time, Anthony.
Thanks very much for having me.